Onto your markets now. Asian stocks made further gains in trading today. This followed Wall Street registering a third straight day of gains on optimism that the US Fed is likely to start cutting rates sometime later this year. Japanese players were back in the office from the May Day holiday, with the Nikkei share average closing up 1.6%. Over in Hong Kong, stocks retraced their gains from yesterday, with the Hang Seng Index ending the day down 0.53%. Meanwhile, Chinese authorities are indicating a will to explore new measures to tackle the country's protracted housing crisis, and that may have helped to spur some positivity in the market, with the Shanghai Composite Index ending 0.22% in the black. Over in the United States, stocks closed higher for a third straight session. Investors continue to gain hope that there is a greater chance of the Federal Reserve cutting rates this year. Data on Friday showed US job growth slowed more than expected in April, taking the pressure off the US central bank to keep rates higher for longer. The Dow Jones Industrial Average rose by 0.46%, the S&P 500 gained 1%, and the Nasdaq Composite 1.2% higher on the day. Here at home, the all-share index trading higher, advancing 0.25% at 76,950 index points. The Industrial 25 index adding 0.3%. Financials are up 0.5%. Markets in Europe are also in the green. Britain's FTSE 100 has added 1%. The CAC 40 in France is 0.3% to the good, and Germany's DAX is 0.7% firmer. Looking at commodities, gold is trading at around $2,313 and platinum at $953 per ounce, while the price of Brent crude oil is trading at $83.11 a barrel. The rand is trading at 18.46 against the dollar, 23.15 to the pound, and 19.87 against the euro. Well, to take us through the markets, I'm joined by Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. Very good afternoon, Makwe. So can we expect the current market rally that we've been seeing over the last number of sessions to continue?
I don't think so. Sanity will have to prevail. Remember, we know that sentiment has been lifted by the fact that bets have increased, that central bank in the US will start cutting interest rates, already pricing in around September. But now markets, unfortunately, have decided to ignore the fact that data has to be looked in totality. And yes, when it comes to inflation, we've seen that almost 3 months in a row, inflation there has been sticky. But the recent rally that has been caused by the labor markets, the jobs numbers that we got on Friday, it has just been one out of those numbers that have been disappointing. And maybe that is why today we see that the rally is not as strong as it was on Friday and also on yesterday.
So, Makwe, we're hearing that Chinese authorities are working on possibly trying to stimulate the housing market in China, which we know has caused havoc for that economy. And aside from that, do you think it's going to work? But aside from that, do you also think that Asia is a better place to invest right now, because their valuations are said to be much lower than the United States? So if you have a bundle of cash or a portfolio manager, is that a place where you would invest right now?
I think it has to work, because for the fact that we've seen the Chinese authorities allowing some of their biggest developers to default, to be bankrupt, is because maybe they wanted to flush out some of those kind of developers, so that when they start to step in, then definitely they know that it will be more of a focused stimulus more than anything, and they'll be trying to help something that at least they can work with going forward. And yes, it's a very important sector, accounting for almost 30% of the economy, and I'm saying it has to work, because come what may, they cannot allow a sector as big as like that to continue to fail. And we know that's what has been hampering the economic growth and also their stock market. And yes, you are right, what has been happening in that region so far, valuations seems to be very attractive compared to valuations in the likes of the US and Europe, but not forgetting that also back home here, our valuations are not too stretched.
Indeed. So let's stick with home right now, because there always seems to be such bad press about investing in South Africa and investing on stocks in the market. But what's your view? Are there pockets or sectors where you think if you have funds available, it's worth investing?
Our bonds continue to be very attractive. The yields that they offer you, that's one. And when we know that our economy, just like most developed economies or any other economy, the government, when they step in, they try to help the lower LSM. The point I'm driving here is that food retailers back home here, especially those well-positioned when it comes to middle to lower LSM, will continue to give you some decent returns. So I think that's one area you have to look at. The question will be which one amongst them, and I'm emphasizing the ones that really have a decent exposure from that end. And our platinum stocks, they had, unfortunately, it has not been okay for them. And I'm saying for the fact that we expect stimulus in China, then we should see platinum and other commodity prices starting to firm up. So I think you can also look into the likes of the platinum sector based on stimulus that is expected in China.
So let's talk about the elephant in the room, that is the rand, our currency. It's been strengthening of late. Why do you think that is? And then also on top of that, there's speculation that should the EFF gain some decent ground in the national elections and play the role of a kingmaker, if you like, in that at the national level, that we could see the rand depreciate. What are your thoughts around this?
You are right. All this negative news when it comes to the rand have been baked into that price. And so far, one of the negative news has been the issue of load shedding. And so far, we've been doing okay. And not forgetting, for the past week or so, commodity prices have been firming up. And the rand itself as a commodity currency, it also benefited from that. And also increased bets that there will be a cut when it comes to US interest rates. We saw the US dollar itself losing some ground, benefiting the rand itself. And yes, the issue that the EFF might end up being a serious player into our politics and our rand might depreciate. Yes, investors will have that kind of a knee-jerk reaction, but up until you get this whole thing to play out. And the point here, we don't have to forget that most, if not all, political parties, whatever they have on their as part of their policies, they don't even get to implement half of that. I'm saying that it's not given that whatever a policy people are talking about, it will ultimately get to be implemented.
All right, well, we wait and see. Thank you so much. Makwe Masilela, he's the Chief Investment Officer at Makwe Fund Managers.